How's it going, everyone? It's Sam. The CPI numbers just came in and they were higher than expected. We got kind of a bad report. However, I think there's something big that people aren't noticing, and I think this may be overblown a bit right now. I want to give you my opinion on it and just make sure you see all the facts out there instead of just hearing the headline. If you don't mind hitting the like button, I appreciate that. Hit subscribe so you see future videos, and there's a link underneath the video to moomoo where you can get 10 free stocks when you just deposit $100. You can get up to $2,000 in bonuses, and just think about how long that takes you to make at your job. It's a great way of making some extra money in these kind of turbulent times. Now, crypto fell drastically, stocks fell drastically on the news from CPI. Let's go into that first. So CPI came in a little bit higher than expected. The consumer price index rose, and it was 8.3% for the 12 months ending in August. This is smaller than the 8.5 last month, but higher than expected. We were expecting negative 0.1% month over month, and we actually saw plus 0.1%. So it was about a 0.2% difference. We were hoping to get 8.1, and then we have the energy, or all items less food and energy, that rose to 6.3% over the last 12 months. So it came in hotter than expected. Not what we wanted to see, especially with the Fed meeting coming up. Now, we do have a Fed meeting just in a week from now, and then we have one more CPI print, and then we have the November Fed meeting. So why are stocks going down? Why is crypto going down? Well, I think it's really just because we realize that we only have one more CPI print. So I think they're readjusting their figures for the next meeting. Not this meeting, because we already expected 75 basis points, but I think a lot of institutional investors are probably readjusting their thoughts after this. Now, Brent also went down. So Brent, if you haven't paid attention, has actually been going down pretty well over the last 3 months. We were up at 122, and now we're down at 93. So this has kind of been a tailwind. However, the DXY pumped up. It's over 109, and it was just 107, actually 107.7 before this. So big spike in DXY, the Dixie, and that's just showing the strength of the dollar and showing that people are moving away from risk assets. Now, why do I think that this is maybe a little bit overblown? Okay, so we came in at 0.1%. When we look at this is still good. If you looked at this over 12 months, that would be a 1.2% inflation rate. July was 0. So what they're doing still is working. We're still seeing a very low CPI number month over month. We were expecting actually to go down, but we came in a little bit higher. This is so much better than June, May, even April, March, February. And if we start looking back a year, this is just from April. This is the April reading. We saw 0.4% September. That makes sense, right? October, we saw 0.9%. So this next month, we're going against 0.4% last year. Now, that's not a huge number. So if we get 0% or something like that, we should have under an 8% inflation rate, which I think would be good headline. Or even if we're at 0.1%, we'd still be an 8% inflation rate. But then really after that, we're going to have a lot of big CPI prints from last year that we're going up against. So it's going to be really easy to lower CPI. If we look and say we get 0.1 and then 0.2 and then 0.1, and then 0.1 again, that's 0.5. When you consider that we have 1.3 here, 2.6, we're looking at a decreased inflation rate of 2.1% from where we are now. So 6.3 or so, 6.2, by the end of the year. That's not horrible. That's better than where we are now. And then we will have some more big prints. So I think we're kind of in this area where it's turned the market for sure, but we didn't get a terrible CPI. It's not like the narrative of inflation coming down really changed. The fact is, it just threw people off a bit. So yes, we might have another 25 basis points, probably not this meeting, but the next meeting. They're going to continue to sound hawkish and scare the market. But then we have 2 more prints before December. We're going to continue to see inflation come down most likely. And then we have another print before January, and actually, this is 2021. So we're going to have more time before next year. We're going to have one print before January here, and then hopefully we continue to lower CPI, and then inflation obviously will be coming down, and hopefully they can stop raising rates so aggressively. So I don't think the narrative has changed. Sorry for rambling a bit there, but I think the narrative of CPI continuing to come down is still there. Hopefully we go against these big prints and we just continue to see half a point or a point taken off of CPI at a time. Now, the market is still worried because of the increased rates that the Fed are probably going to have to give us, probably 25 basis points in my opinion. And then they'll just continue to see how it goes because, again, they're in a tight spot. They can't continue to raise rates because we can't handle that kind of environment. They can't handle that kind of environment with their debt. So, yes, stocks are falling pretty drastically. We can actually see up here 2.4% on the NASDAQ just falling off a cliff. We still have Bitcoin falling down. We still have a lot of higher risk assets falling down. But overall, I think this was not positive, but it wasn't as negative as a lot of people say. And it's really easy to get this misinterpreted if you just look at the headline, oh, this came in worse than expected. That's going to be bad. But when you consider it overall, it's not terrible. Now, I actually had a long open on Bitcoin. I've talked about that on the channel a couple days ago. I did a trade, or a couple trades actually, and I came away with an 85% profit on a 20x long on Bitcoin. I came away with a 45% profit on a 6x or 5x on Solana. And then I had a 6x still on Bitcoin. It was up about 35%, and then it fell down. I sold it right around here. So I came away with a 10% profit. I was able to get in several days ago at 21.2. So overall, not a bad trade at all for a few days of just waiting around. But if you guys want to try trading, there is a link underneath the video to BitGet. I wouldn't suggest doing that unless you're an experienced trader or you try a small amount, probably both. I am not an experienced trader really with swing trading, but I want to sharpen my skills a bit. And it was a small enough amount of money that I'm comfortable with it. So just keep that in mind. There's also the link to moomoo to get some free money. Again, I just think that's super easy. I used to do things like that all the time to make extra money, and you can start trying out a new trading app and a new app to buy stocks. So definitely check that out. I met with the moomoo team last week too, and they're awesome people. So definitely give it a try. I am looking at continuing to sell covered calls as well and doing the wheel strategy on options. I realize that it sounds very different than my overarching theme of just buying and holding. Just keep in mind that these are all small parts of my portfolio, and the option strategy that I'm using is very safe. It's not buying puts and calls, it's selling them. So I collect premium along the way, really decreasing risk. Now let me know your thoughts on the CPI print underneath the video. I think today overall will probably be a pretty red day, but just keep it in context. I'll be buying today. Let me know if you will be underneath the video. Thank you so much. I appreciate it, and I will see you in the next one. Bye.